How much house can you afford? The common question. A lot of people are going to go to the bank. Next thing they're going to get is a pre-approval letter. And what they don't notice that the bank looked at their income and took 43% of that income and said, you can use this to pay your mortgage. I don't know about you, but I like to live a little bit. And 43% of my income is a lot to spend on a house. So we built a little calculator so you see the math behind what they're looking at, and you can look at it the same way and apply it to your life. Because you're the person that needs to decide what you can afford and what you can't. What is truly affordable? Here we use 28% as if it's under 28%, you're in the green. Most people can afford 28% of their income towards their mortgage, their taxes, and their insurance as they're projected. 28 to 36%, we call that the attention required zone. And anything over 36%, you're wading into a very risky territory. That's up to you to decide. There's a lot of different ways that you can maybe offset that income. You can get roommates, make sure you follow all the mortgage laws on whether or not you can have roommates with your mortgage, but there are ways to make it work. So let's get into the numbers here. We've got a purchase price of $637,000. Crazy as that might sound, depending what your area you're in, it could be low, it could be high, but we'll just call it $637,000. A down payment, 10%. Interest rate 6.25. That's pretty standard right now. And the property taxes, we got that at 1%. Depending on where you live, that's definitely doable. Maintenance and insurance here. I think this is probably going to be more towards 6,000 based on that house. Maintenance is a very overlooked component here. Because maintenance is not truly required, right? You can buy a house and you let it fall apart. We see them every day. It doesn't help your asset, but the bank doesn't care if it's maintained or not. So they're not even going to take that into account when they determine whether or not you can pay the mortgage and maintain the home. Here, we want you to have a maintenance component because we've seen enough blight. We don't want to see any more. Take care of your house, please. Plan for it. So next, we're going to look at your income. What do you expect to make this year? What's your base salary annually, hourly? A little trick. You just double the hourly rate and do 1,000. So let's say you make $30 an hour times 2 years, 60, you make about 60 grand. Now, annual bonus depends on your situation completely. I don't know what your bonuses are. Don't know if you make stocks. A lot of different payment solutions out there for employers. I made some decent amount of stock with a lower salary at another company, had great bonuses at other companies. It just depends on how it works for you. So how do you make your money? You put that in here. You put in capital gains if you're a house flipper. There's a few different numbers you can throw in, but what's comfortable for you? Now, we're going to vary some of these numbers a little bit just because we can see where the down payment can pull you from just at the end of attention required. A common mistake a lot of tech workers make is they overlook the stock and the RSUs. Those are portions that need to be reported to the bank to look at your full picture. If you want to just keep those completely separate, understand that a part of your income is locked up there, that's okay. But you can purchase more home, and depending on your area, a home that is more comfortable for you if you include those RSUs and stocks with your bank. Not all banks are going to work the same, but make sure you talk to your lender about whether or not they use that as part of your income calculation. And make sure that lines up too with your expectations, because if they think that you're going to use some of your stock to pay the mortgage, you have to understand that you may have to use some of your stock to pay the mortgage. It's simpler said than done. So let's talk some strategy though. When a house stretches the budget, buyers are going to look at a lower price. That's definitely an ego move. You can get, okay, we took 637 here. We're going to move it down to 620. Ooh, okay. 0.3% on the affordability ratio, maybe $60 a month. It really didn't make a big difference. It feels good up front, but it doesn't mean anything. Now let's look at $10,000 concession from the seller, and let's look at maybe buying down our interest rate. What does that do? Okay, we're going to plug in 637 again, and let's just say we knock the rate to 5.5. So the general rule of thumb is that for every 1% that you buy your rate down, 1% of the original loan amount, so in this case, $6,370, you get a 0.25% discount. So in this case, we apply that same $10,000 that we get from the seller to sell a concession towards buying the interest rate down, we see that it's actually going to be around 0.4% interest rate reduction. So in this case, 6.25 to 5.85. And we lose 0.8% on the affordability ratio. We about doubled the savings off of if we were to just take with the ego move and say, I want $10,000 out the price because that's mine. I want to get the better deal. Not a better deal. A little strategy goes a long way sometimes. You can't buy down property taxes. You can certainly appeal them and argue that the house isn't worth what the government thinks it's worth. There's ways to do it. I'm honestly not the most familiar with it, but there's companies and there's people that talk about it all the time. Limited savings here, though. Maintenance, insurance, a million things you can do there. But I always recommend maintaining your house to at least a minimum standard. And yeah, so there's a lot of different levers at play here. So it's up to you to go make your own account and plug in your numbers to the calculator. We've got a link in the notes here and check it out. What does your situation look like? What's your affordability ratio look like in your current home? What would make your life more comfortable? Bigger house, more affordable house, whatever makes the most sense to you. It's your decision to make. We're just here to help you make the best decision with the math. Build your calculator, save to your vault, request an execution plan, meet with me or one of our other advisors to help you decide what's the best move for you to make.